Hello, guys, and welcome. This is Stifex Trading Flow. You know very well that I had promised everyone that I will be releasing a YouTube video or a guide on how we go about our signals, especially on three aspects of patience, risk, and trade management. And the key important thing you need to know, number one, that we based our risk management or our trading after we go through our strategy and everything is the average true range, because this one is the one that indicates how far should you be able to risk about your money. And that's why I want us to go into basics of the average true range. You know, these are at least these are basic indicator, just as a basic RSI before you go to more advanced indicators. This one was developed by Jay Wells, and in his book, I think in each and every discussion you find in the most of these forex or basic manuals, you find that it was in the new concept in technical trading systems. And from there, the key thing you need to take away from this indicator is that the average true range is a market volatility indicator. If you check on these 4 points, that it is used in technical analysis, of course, and in most cases the key use is that it is used to measure the market volatility by decomposing the entire range of a specific asset price for that period. This means that it will be able to check the volatility by if you check on it by taking its highs and its lows in the market. If I'm in such a market, what it will do is that it will take the high and the low of a specific day. Let's first of all use a common indicator, a common let's use just a common currency like Euro USD. If you check on this one, and if you check like this previous candle, what it will do is that because it deals with cross indicators, it will take this high. Like if you check, we are checking on this specific candle. This candle is the one that you are checking on. If I let me maximize this. If you check on this yesterday's candle, it takes its high and its lowest price. That is, this can be its. Let's take for an example. Yesterday, this was. Let me remove this one at least to know which specific candle I'm talking about. The lowest point this candle hit was at 1.0633. And the highest the price did hit for yesterday's candle was at 1.0751. So if you subtract these two, you can be able to check that from 07 to 0700, that is 51 pips. 51 pips, then from 33 to 100, that is another 77. So you can take 77 plus 51, and you get the one answer. Then from there, it will go to the next one of a specific period of time. Most of these indicators, if you go, they will take the 14 period. But for more accuracy and more information, remember, the higher the number, or the higher the number of sample, or the higher the sample size, the more accurate the reading that you will be able to get, because there are some times whereby you may get abnormally big candles because of fundamental releases, and they may give you inaccuracies in the market if you have 2 weeks of 2 weeks that you have news going on each and every day. So from that point, you only take 2 days. You can only take in our case, I take not 14 days, I take 200 days for the ATR. So you get the high and low, you subtract the high and low, and then you get a specific number. Then I'll divide by for the last 200 candlesticks. Now from there, I'll be able to get a specific number. I'll be able to see the volatility number of a currency over the last 200 candlesticks. That is what we take when we are doing our ATR readings in our market. If you check like here, this is our ATR for the last 200-day candlesticks for the Euro USD. In such a case, is 29.90. It is 29.9070 on a daily candle. That means on a daily candle. That means I'm expecting. Is this Euro USD? Okay. Yeah, the ATR is, you can check here, 73 pips. Sorry for that. I was reading the ADX. If you check here, it is 73 pips. That means a candlestick, like if yesterday I was in a sell for Euro USD, I will only target 73 pips. Same case, if I'm taking my stop loss, the highest I should take is 73 pips. After an entry, because I look for entries on the 4-hour chart, if I could have picked a trade from this price point, because it will have dropped, And of course, by the time, because I'm waiting for a 4 hour candlestick to close, it will have taken some few candlesticks. So in my case, I'll take 0.75, 0 point or 3/4 of an ATR. That's what I'll take as a, so I'll take 3/4 of 73 pips. That is where I will place my stop loss, but my TP will always be at one ATL value, because from that point, unless I want to hold the trade for long, that means if I take a trade, because in my case I always open 2 or 3 trades, so when I close one, the first initial target should be at one ATL value, because the ATL varies from one currency to another. Like if you come here now to this case, for this pound USD 87 pips, and it keeps changing based on the volatility of the market, because after this, you'll get, if after today's candles close, this one will be included for today volatility, then on here the 200th candle will be removed. That means the number keeps on changing day in, day out. So that means now you need to keep on checking every time you get an entry in that market. So, and that is how we operate. I do operate in such a case, and that is the best one you can use, because nowadays, if you are trying to pick a trade based on candlestick, and I will give you an example. Like there's a candle that there was a trade we had like last week. Yeah, it was a sell from this specific area, this candle here. If you pick a sell like from such a candle here on the H4 chart, if you pick this trade from this point, if you place your TP just above this high, it would have been cleared by this, and this is a price hunt. That means, but if you could have put based on the ATR, it would 0.75 stop loss of an ATR, and then here you put maybe a value of an ATR maybe was around from this price point, that will be good for you, because you will be safe. That is how you operate, and that's how you work with this ATL value. You see, in most cases, it will not give you specific entries, but it helps you in your risk management. And that is how we do it. I always do it, even when it comes to volatility indices. One and the same thing. That is how I do it. Every time I get an entry, that is how I'll pick my entries all the time. If I get an entry from this point, I'll have to go here and read the ATL value. Like if you check here on a daily candle, especially for this is VIX 75 for volatility indices, you come and check the ATL is 21,738. So I'll take 3/4 of this and put it as a stop loss from my entry point. And the TP should be one ATL value. If you want to continue from that point, from one ATL value, you can continue to check the major support and resistance levels. These are also key levels that you may need to keep on checking. So from here, these are other cases whereby you can start to check, whereby maybe after you hit one ATR level, you can close one trade. Then from there, you can put a break even and continue to trade your trade with one ATR value, depending on your risk appetite. But the best thing, in our case, I think everyone in here in our VP signals, we know we trade based on intraday. So after you pick a trade, after the next 4 to 8 hours, and I said very well, like yesterday we had all our trades went into profits. But in the mid New York session, after 1, 2, 3, or 4 hours into the New York session, if you are in profits, just exit everything and call it a day. And then the next day, because the market after the New York session will go into consolidation, and you can check after the drop, consolidation, after the drop, consolidation, after the drop, consolidation. So each and every day, we are picking new trades, and you can check here you're having only three or four candles on the H4 chart. That's what you should be picking. But the key thing is putting your TP, because there are days like yesterday, if you check like a GBP CAD, it was able to drop for over 140 pips. And if you check its ATR value for one day is 106. That means you could have it is it's one ATR quite early, and then you are done with that. So that's how we deal with our risk management. So make sure every time, even if we don't put TP or SL, that should be your key thing. So be conversant with the ATR. ATR, you just take it from this point to come to oscillators. You find here ATR as the average true range. This is the average true range. You can be able to know the ATR value of any trade by checking these numbers. These are the pips wise. Like for Euro CHF, you can check it, it's that 8 pips only. For Euro and ZD, because they vary from one trade to another, this is 30. For USD CAD, if you may check for this one, you check it is 66 pips. So that means this is the TP value from the entry. This is the TP value from the entry. Like if you pick this trade from the entry, you drop there down, that's you put 66 pips. And from there, from behind from the daily chart, you can be able to put 3/4 of 66. If you divide this one uh, by 3/4, you'll find it is an average of you just divide this one by 3/4 or 0.75, and you get the value of this, and then you put it out there. The good thing is like in my case, I have coded this one. They will just be put automatically. I don't have to keep on doing those maths. But overall, the other guys want to put one ATL value, TP, one ATL value, stop loss. Then from there, you can trade your trade, because on strong trading markets, you'll find the cases whereby the market will just follow you and may move so many pips, like in such a case. When ADX is in a strong momentum, the market can even drop over 5 ATL values. You just need one. Even if it does not hit the TP, just exit the trade. Let's wait for tomorrow for other new trades. And that's how we do it. So each and every time, because like you check in our markets, we post result after every 4 hours candle close, including this one, including the deriv.com VIX indices every 4 hours close. This is when you are looking for entries in the direction of the prevailing daily chart. Then that's why then we put our indicative elements so that you can be able to check for volatility, conferences in the market, and of course the ATL targets. And that's how we do it in this market. So if you have been having problems with that, that's how you should go about our signals. I don't think that is a big issue for everyone. If you are a forex trader, you should be able to move with that as easily as possible without any hiccups. Unless you have any problems, you can be able to contact the admin at Colonist FX, and you'll be able to be guided further. So, but the key thing is when you get into a trade, put TP, stop loss. TP is 1 ATL, stop loss is 0.75 or 3/4. You can even put at 1 ATL. But during the mid New York session, in the next 4 to 8 hours, if you have made between 20, 30, 50 pips, even 100, or even hit the target of 1 ATL, just exit the trade and don't close the day with losses, so that the next day we are there once again making profits together. And that's how we do it here in the phone, under StiffX trading flow. So as easy as that. So make sure you can even Google this ATL, go through it, read the basics. Even other basics books got that. You can check here, like the way they are doing day 1, day 2, the high and low of candlestick. You get those values, then you divide it by the numbers. Like here, if you add all these numbers, then you divide by 14, you get one number. That is the ATL value for that specific currency that you want to trade. So that is it. From StiffX trading flow, let's earn as we learn. Let's continue to learn here. And then don't forget, we are in mid-month. If you want to pick our signals starting today, this is $30 monthly. Our full cost is 300 and 200. We are just in 2 months, but starting next year, we are going to $50 monthly. And then here we are going to 500, and all our strategy will be costing $250. So you can be able to build yourself out now, so that you don't have problems starting next year, so that you can be able to build your capital with our signals. So that is it for today. And from StiffX, thank you.